Well, what is going on, guys, and welcome into the video. So Wall Street and all the talking heads are already back at it again, talking about us revisiting those lows back in October, how likely it is, and all sorts of good stuff like that. And of course there's some saying not only are we going to revisit those new lows, but we're going to make crazy new lows. So let's watch and see exactly what they said, and let's kind of talk about it and see, because there's some good points made in the video. I can't lie here, guys. You guys know I'm not going to lie to you. There's some good points made in the video, and I think we need to talk about it and be prepared for it. So just like the video, and please make sure you're subscribed and you got your little notifications bell turned on so that way YouTube shows you my videos. I really appreciate that. That's all I really ask. All right, so let's jump into it and see what they have to say here.
Pretty good. I feel pretty good. We'll get to individual stocks later, but to your question, unfortunately, same as the last year, right? We got to talk about inflation. We got to talk about the Fed. But the one thing that I would say is very different from when we hit those October lows or those early summer lows is inflation seems to me clearly on the way down. You've got a Fed that's a lot closer to the end than it is to the beginning of its rate hike campaign. And you've got an economy, Scott, that's hanging in there. And it catches me by surprise, too. But yesterday, the Atlanta Fed GDP Now estimate for the fourth quarter was revised up to 3.9%. You're going to say, Scott, and I'm going to agree with you.
Yeah, right then and there, guys. It's already shown you guys. I don't think anybody would argue inflation is getting better. Now, I agree completely with the other side saying, hey, it's not where it needs to be. Agree there 100% completely. But kind of looking back to that October timeframe to now, inflation has clearly come down. The Fed clearly, in terms of their own estimates, what they've been putting out there, they're much closer to reaching those estimates than they were at zero when they first started. So both those things are in line. And honestly, the print being for GDP at 3.9% growth after 3% the previous quarter, that's 2 consecutive quarters now positive GDP growth after the 2 consecutive quarters of negative GDP growth, where we had the basically first technical recession that we actually talked about back in January. We were going to have a technical recession. We had it right there. We've come out of it with honestly 2 strong quarters of, GDP being positive. Basically GDP typically is in that, 2.5% range is kind of where you want it to be. So being at 3.9 is honestly really good numbers. Now let's see what the fourth quarter comes into at. But, thus far, those are pretty good signs that the economy is doing okay. Not saying it's great, not saying it's gangbusters, just saying, hey, we're at least hanging in there exactly as he stated. So shockingly, it's actually a decent take from this person.
That's now and what's going to come. I mean, we shouldn't expect 3.9% in the first quarter. That would really catch everybody by surprise.
I wasn't going to say that.
The main point.
I was going to say, get to the point, answer my question. Are we going to retest the October lows or not?
I'm setting you up for the answer, which is I don't think we are. I just see a much, much better economic and Fed set of conditions than when we were there in October. It's just that simple.
Kerry?
Yeah, I won't argue with that, although I do think it is possible we do retest those October lows. You saw when we hit the June lows and then we made the new lows that was just slightly lower than the October lows. You saw exactly what happened there. The same stocks that were leading the way in those June lows were up, and a whole new batch of stocks were leading the way to those October lows. So there's no doubt in my mind we could see a new low again. We'll just say February. I'm totally random, guys. It's not a actual guess on anything. Pick a month. We'll say that. Pick a month. I don't want to be one of those YouTubers out there guessing everything. So pick a month in the future where we make a new low or we get close to that new low, but it's a whole new batch of stocks leading that way down, while some other stocks that kind of led the way in June and October actually being up during that same time frame there. And I think you're seeing that right now with the big names like, your Apples, your Microsoft, some of your old man type stocks that I love to call, finally starting to come down. Those Dow stocks finally starting to kind of lose their momentum where they were actually did very, very well last year, starting to lose their momentum this year and kind of leading the quote unquote overall markets, the overall indexes down. But, a lot of the stocks that obviously have been crushed, that doesn't necessarily mean all those are going to come down as well along with the indexes there, just like we saw in the October lows being different than June. So, yeah. Oops, might help if I learn how to push the right button,
well,
right?
We've had since mid-October 3 higher lows. Okay, technically speaking, the market is trying to set itself up for some continued strength. Now, I know that it was making lower highs since the beginning of last year, but this is a trend, honestly, since mid-October that feels like this is the type of day that would support saying no to the market going back to those lows, because, we're getting around this 3,800 level back and forth, but we're not going back to 36, 3,500 so easily. The market seems to have some buyers at this level, and a day like today proves that point.
Jenny, UBS says you're going to have a sell.
I'd love to see volume for today. I didn't go and look ahead of time. I should have. I apologize. But I'd love to see what the volume distribution was and how much volume was involved in those pushing the prices up today.
Into Q2, 3,900 is at the end of this year, so basically where we are right now. It seems to be kind of the prevailing thought, right? You have trouble in the first half, you rally back in the second half, maybe you end up break even, maybe you end up higher, depending on whose target you are looking at, who is right now at the highest end.
Right, so I think that 14.5 times $220 earnings and bringing us back to 3,200 or to 3,200, I think that's plausible. I don't think it's probable, but I think it's plausible.
What's probable?
It's hard to
That's
say
what I'm
this
trying to
year.
get at today.
Yeah,
What's
I think
probable?
so. I think what's probable is that 81% of the time after a down year.
Is it just me, or does it look like when they ask a question like that, they all look kind of lost? Not knocking the lady or anything else like that, but it seems like when they ask that question, that it shows you how much whenever we talk about what does Wall Street know, what does Wall Street not know, who knows what, smart money, all other crap like that. As you can clearly tell, everybody on these things are just guessing, and every day they're guessing, and every day they're making new guesses based upon, whatever the latest and greatest is. But the reality is nobody really knows where the market is going long term. We're all trying to make our best guesses here and such. But that's why a lot of the folks that get on these shows or on YouTube or wherever, social media, and try to make certainty this is going to happen and certainty that is going to happen, they're wrong far more often than they're right there. And I was just on her face there. It just kind of, when he asked the question, he asked very specific. You kind of see the possibilities and a lot of the crap. I don't want to put a definitive anything out there. I'd rather give a list of possibilities than just a definitive this is it. So just something interesting there that I noticed, and it just kind of caught my eye.
The market's up. And so I think I think what's probable is that we're sitting here in a year from now and we've had a positive market. But the in between now and then is going to be very humbling and very hard and a lot of hard work. And I can see us testing highs. I can see us testing lows. I just think it's going to be a year of digestion.
Okay.
Like if last year.
There you go. I mean, you kind of see we could test new highs, we could test new lows. A lot of indecision there, a lot of uncertainty. But I won't disagree with a choppy market there. So she did a fairly good job there identifying a choppy market there. But yeah, a lot of the other stuff sometimes just kind of makes me chuckle when everybody's saying with certainty then over the market's going.
Reckoning, this year's going to be a year of digestion. And it might be where most of 2023 is actually spent looking forward to 2024 and anticipating what comes there.
Is it going to be indigestion, Joe, is the question for the big mega cap tech stocks. And that's where I'm going to pivot right now, because I mentioned at the top of the show, if it was Apple.
I don't get the same.
No, because I've talked to you a million times recently about the market.
I'm sitting here doing math.
That's right. I've gotten your market view a lot lately, and I want to pivot you to what is certainly one of the stories of the day, and that's Microsoft. And I'm pivoting to you on that because it is the worst Dow stock today. It's the worst S&P stock today.
Okay.
And it was one of your picks yesterday in our stock summit, to which I asked you upon your
Yeah, I mean, like we just said, Apple, Microsoft, some of those stocks, they're in for some more pain. We've been talking about that for a little while here. So, yep, it's right there. But let's see what he says.
To the building today, if you wanted to reconsider and perhaps petition us for a redo, to which you said no. Well, yes, it would be a petition because we'd have to decide, and me as the judge would have the ultimate ruling on that. And I don't think you want to know how that ruling would go.
Yeah, no, I just don't want to go through a full trial.
So what do you think here? Right, it was downgraded today. This is a big deal. Okay, it was downgraded today. It's our call of the day, and we bumped the call of the day all the way up for obvious reasons. Too neutral from buy. Price target goes to 250. This is at UBS from buy, and Azure, and it's about the slowing growth engine. One of the principal reasons why people were willing to pay a higher multiple than historically averaged for Microsoft because of that growth in the cloud.
Mm-hmm.
What do you think?
So what I think is that if you have high conviction in a stock, if you have a belief that you're owning a stock because it's going to provide you a conservative allocation towards a select group of stocks that you think potentially could have a recovery, the best thing that can happen is that expectations get lowered. And that's exactly what happened here. So I feel even better about it. I feel better about the fact that we're marking down what we believe the earnings growth for the most significant component of the business, the component of the business where the growth and the revenue appreciation has been catalyzed over the last several years, and obviously that's Azure. So I feel great about it. I like lowering expectations. It does not change my view at all This is the most diversified mega cap.
Yeah, he makes a great point there. If I could talk, it's kind of a problem. Anyways, he makes a great point there that it's when you see kind of the analysts and some of the expectations come down, you're kind of seeing that. Hey, that's been my concern with Apple. It's just they continue to raise the bar and, meet expectations, beat expectations. The bar gets raised, the bar gets raised, the bar gets raised. At some point in time, you just can't meet it anymore. And you'd much rather there be a nice gradual, hey, kind of a lowering of expectations, nothing terrible, nothing catastrophic, just kind of a, hey, it just may not be the year this year, or maybe with, let's adjust that growth rate a little bit. Let's adjust, it's going to be a rough year this year for next year. Basically what you're doing whenever that sort of stuff happens, you take your medicine now. So when the earnings call comes around at that stage, when the earnings is announced, the expectation's already lowered. So the bar is lowered for you to meet. And of course we all know what happens. You could have a big beat there. And all of a sudden it's like, wow, this is amazing. Who knew all along? And it was just, oh, okay, well, expectations were already lowered in the first place. So a lot of ways, especially in this type of market where it's a downtrending market and everybody's looking for everything negative, basically taking your medicine early a lot of times will actually help you later on, in terms of when the earnings call comes and you aren't necessarily, you would have never met that higher number to begin with. At least now you got a more reasonable target to hit as these things happen and as you kind of go through your earnings call there. Basically as Wall Street kind of adjusts their expectations down for what you're going to do for your earnings call. So it's actually not a half bad point at all there. As long as you're not seeing something fundamentally wrong with the business or something fundamentally happening, and it's much more of a short-term thing or much more of a product of the environment we're in right now, not a problem with the company itself or the business itself or the future growth. And I'm talking the future growth, like, 3 years, 5 years from now of that particular company. That's definitely not a bad thing at all. So actually, this is actually the most great points I think I've heard in one of these things in a long, long time. So I got to give these guys kudos for at least being somewhat reasonable, not being ridiculous. Maybe it's because Kramer's not on there. I don't know.
NASDAQ is 4% above its October low. The NASDAQ is going to take out its October low at some point. And in that type of environment, I want to own Microsoft above the other mega cap.
All right, so I guess he's really, really positive on Microsoft there. I would agree. Probably Apple probably has a lot to fall as well. So I mean, Apple and Microsoft at this stage is kind of a toss-up. I have not studied Microsoft in years, so I can't give you a really good take in terms of which one I think is going to perform better in the future and such. You guys know I have the money in Apple, so and I understand that stock inside and out, up and down, all the way around. So that's kind of where the horses that I bet a long, long time ago I've been and will continue to be. But hopefully, as you guys can see from the video there, that there's, despite the fact they have good takes, the reality is nobody knows what's going to freaking happen. Everybody's guessing at this stage. Everybody's making different points and counterpoints, and this data shows this and this data shows that. Guess what, guys? That's nothing new. It's going to be that way during bull markets. It's going to be that way during bear markets. Of course, the narrative changes. What they get on there say changes. The stocks that they like change all the time and stuff like that. But overall, there was actually some value out of this video today from these guys. They put a lot of good points out there and such. So I'm happy we got to discuss that today. And remember, if you want to join my group, it's the first link down there in the description there. You get 5 free courses. You get to talk to me all the time. I'm on there constantly in the Discord. We do live weekly Q&As. There's all kinds of stuff in there. We're really, really gearing out. We got some big plans coming in 2023. So if you want to take advantage of those, make sure you jump in it and click here if you want to see all the stocks that I'm buying in this market. And click down here if you want to see my exact plan for what I'm doing in this market. So thanks for watching, and we'll see you in the next one.